Hello everyone. We are here to understand about the moving average, the importance of moving average and how exactly the moving average is useful in the market or not useful. Let's understand in detail. So moving average is basically a averaging. For example, if you are having a 5 trading days, that means first trading day, second, third, fourth, fifth, all these 5 trading day divided by 5 and adding the total 5 trading days number. So that is going to give you an average. It is like a simple averaging. You're not doing anything else apart from averaging. For example, the trade, if we are having a 5 trades, like trading day 1, trading day 2, trading day 3, trading day 4, 5, like this. So average of this, you will get a moving average. It is simple. There is nothing. If you are having 1 plus 2 plus 3, 5, up to 5, if you are having, just divided by 5, you will get a simple math average. So this moving average is good in reading in line charts. If you are reading it in candle, you will not get more clarity or a trend visibility. So better to read in line chart. And moving average is simple average by periods. There is nothing much complexity and there is nothing much useful or nothing much more visibility also will get. So we will understand in this video, we will understand moving average and how to overcome from this. What are the advantages of using this moving average and how to make a best out of moving average. Let's have a look on this in the entire video. Okay, just to identify trends, we are going to use moving average, and it is used for a long term trades, not for a short term. We are using this for a long term trades. It's going to be good for long term visibility, and basically this is a lagging in nature. This is not a leading indicator, lagging in nature. It gives after the market movements. So but we will tell you how to make benefit of this from this advantage of this moving average. We will tell you in the upcoming slide. Okay, here this is a simple moving average. Okay, so simple moving average, look at this one example. If we see, just we have taken simple moving average, nothing else, just we have taken one moving average line. See how it is moving. See, this is going and market is here. There is no connectivity here and market is here. There is no linkage here and market is here and here. So what basis you can trade this? This is just giving an average. So worst to worst case, market should supposed to trade here, but it is even more. But here I'm missing this trade. What is the overcome of this? See here again, moving average is crossing and so much difference here, so much difference here. So what's the use of this? There is no much use, right? So we cannot make use. Only we can say, okay, market is in the uptrend. We will get to know the trend. That's all. And this trend also can be seen many more ways, even more deeper. It is like, generic. It is very generic in nature. It has given this. So the advanced version of moving average, let's have a look on this. So advanced version of moving average is an exponential moving average. Look at this exponential moving average and simple moving average. The red line is a simple moving average. It's just moving. The advanced one is like, it is comparatively moving average. It is smoother. It is at least giving some clarity. See, it is near to this chart. It is at least it is running. For example, see, this is how far it is compared to this, right? At least this green line is near to this. Compared to this, this is somewhat advanced lagging, or we can call it as less lagging, we can call it as. So it is at least giving a kind of a originality or better than this. You can have a better in exponential moving average. So that's why people always tend to look after exponential moving average. Always, at least it is giving an early indication than this, right? So this is giving indication later and it is giving little early indication. You might have got something better or something smoother than this simple moving average. Now, if we understand in detail how exactly we can beneficial of this moving average, let's have a look on this one more detailed on this. Now, there is an exponential average. We come to know now exponential moving average is good or comparatively smoother than the simple moving average. So when we come to know that, why don't we think of using a moving average ribbon or exponential moving average ribbon? This gives more clarity and it will give an early indication that market is taking an upward direction or downward direction. You can have a more visibility towards this. See, this is why exactly we have taken this moving average. I'll tell you how to set up this trading setup also. So that standard trading setup, why exactly we have to take 21 here? Because normally in a month 20 or 21 or 22 trading days will happen. So in an average we are taking 21. Okay, and the ratio 21 to 13 is a ratio we have taken, and 21 to 34 is the ratio. Between this ratio, we have considered 13, 21 and 34 is a good. Actually, it is as per the moving average or technical analysis. Cowell also has suggested that 13, 21, 34 is good as per his book. You just refer the technical analysis book. This is really good. 13, 21, 34. It's a standard. Even I remember this as like it even uses in Fibonacci series and even GAN numbers. Everywhere this number is more important because 21 is a trading number average in a month. So we will take 21, and ratio sometimes we will take 11. You can take even 11 also. That's not an issue at all. But if you take 13, the more clarity you will get, and 34. This is a good number. You can remember this and put this as a moving average ribbon or exponential moving average ribbon and make a standard practice of RGB, red, green, blue. Red stands for 13 and 21 stands for green and 34 stands for blue color. So here the color representation also, it's very easier for you to refer. Always remember 13, 21 and 34. That means 13 should be greater. 13, that is red, should be upper, green should be always in the middle, and blue should be always in the bottom. This is a good identification for us to identify, okay, market is in the upward direction or downward direction. It gives us even more clear visibility. Let's have a look on this. See here, green is in the upward, sorry, red is in the upward direction, and green is in the upward, and blue is in the upward. So that means green is 13 is 21, 34. So this is clear indication that market has started taking a upward direction. See how market has started an upward trend. And as soon as this red crosses and then becoming down, and then this even green is also eventually coming, and blue will be in the top. So that says what? Market started downtrend. You are getting an early indication that market is trading towards a down situation. As on today, even we are seeing market is in the down situation. Look after this. See, red was in the top and green and blue. What exactly happened? Red started coming below and green followed by and blue followed by. So look after this. Market started taking a downtrend. So use this scenario like red comes below, 21 middle anyway, and 34 comes on the top. So the blue comes on the top, green middle usual, and red goes below. That means market started downtrend. Red goes above. That means market started downwards or upwards. You can rectify easily. So this could be an early indication compared to the simple moving average. This moving average ribbons is at least we can say the trend is on the positive direction. At least you can catch this trend. This might not be so useful for an intraday, but this will be good for a long-term investments. If you're planning for setup of a trade like a swing trade, maybe a week or 15 days or a month or even a year or something, this moving average gives you a clarity on, okay, market is in the uptrend or downtrend. See the smoothness when market is crossing this red is crossing green and again blue. Once it crossed here, this is a complete crossover. Market started taking an upward direction. From here you will come to know, and eventually green has crossed and then blue remains same. So from here onwards you can actually start trading, or at least you can think of, okay, you can either start taking a trade over here so that it will start eventually upward direction. So this is one clarity on the trend. You cannot exactly trade, okay, this is the entry point and this is the exit point and this is a stop loss. No, you cannot do this. You can just get a clarity on the trends, whether market will be in the uptrend or downtrend will be clearly visible once you set up this moving average ribbon. So rather than using simple moving average or even simple exponential moving average, use the exponential moving average ribbon, or take moving average 3 times and change it to exponential and change this number to 13, 21, 34. You can do this. I will show you the setup. Just go to any trading software. I'll go to Upstocks here. I'll just clear my drawing before that. Okay, this is my Upstocks. What I will do, I'll just go to studies, take a moving average. I'll go to settings. This I'll select this close. Always keep this as a closed one so that you will have more clarity on the closed. So exponential moving average, I will go with 13. And again, add one more moving average. Sometimes you will get in the trading tool moving average ribbon, so that if you are not getting it, you just set it up by yourself. And then 22. Or you can put it, see, 22, 23, 21 range is fine. So just I'm just setting it up as a in generic. So I'll take it as a green or a dark green. And third one, again moving average. I'll come to studies here again. I'll set this as 36. Okay, this 1 or plus or minus 1 or 2 days is fine. Okay, don't be so much specific on this. Just take your call over there. But I'm just telling you this number and approximate. See how clearly it is showing. See, market, it was in the red, blue was higher, and then green in the middle and red. So this was clearly showing market is in the downtrend. Now again, this is taking over, right? The red is taking over and green also take over, and as well as blue eventually came take over. So from here you will get a clear visibility or angle that you can go for upward direction. Now same thing, look after this. This red started coming down and then becoming the below, and eventually green is also expected to follow, and blue, if it is completely happens this, then market will start the downtrend. If it is bounce back, then it is a different situation. But once you get the fertile ground, see, always wait for this complete signal. Don't jump the gun before making complete pattern. Okay, it is about to make the pattern. Once it makes the pattern, take it. So this is a clear swing movement. Try this kind of a swing movement, you will have more clarity. Just don't take, okay, it is just crossing, you don't take a trade here itself. There is a possibility that here itself might take a reversal. So don't make an early decision. Wait for a proper pattern and make this as a movement. You will have more successful trades, or at least for a long term, you will have a more successful trades. And this is for an educational purpose. Please use it very efficiently. Thank you for watching.